And hi, everybody. It's Tim Reazor, the Chief Investment Strategist here at Revere Asset Management, just before 4:30 on a Thursday night. So very quickly, stock nerds, and market lovers, excuse me. Let's do this real quick. I need to let you know tomorrow's Friday. Video podcast day is what Friday is to me. And so for those in the know, and everybody will be in the know after I'm done telling you this, you can get the video podcast early, like the moment that I post it. If you're checking Daily Market Insight, this tab right here at Revere Asset. So all you do is go there maybe about, say, I would say 4:30, 5 o'clock Central, and it should be in there. It should be one of the links, and I'll absolutely tweet it out, and I'll show you how you can find that as well. Because what we do is we typically release that podcast around 8 a.m. Central Time. On Saturday, it goes out, and then it gets uploaded at the same time to the Google Play Store, the Apple podcast directory. And so that's where you can find it as well as on our website. But if you want it early, you want to start your weekend research early before it gets delivered to you, all you have to do is go to Daily Market Insight. And if you have any questions, concerns, comments, take umbrage with anything that I'm saying, all you have to do is give me a holler here, tim@revereasset.com. Tomorrow, Don's going to do another, it's so freaking popular, the 21 over 21. So Don's going to do the video tomorrow night. And you'll have two videos in this Daily Market Insight tab to work with tomorrow night. You'll have the video podcast, and you'll have the 21 over 21 list that Don's going to give you. Fantastic watch list. And in America's Fiduciary right here. You, on the other end of this microphone, my fellow stockholders and market lovers, are doing a really good job. Danny I haven't talked to Danny that much this week because you are all calling him, which is appreciated. No, I'm just kidding. I love Danny. But you are calling them in droves, and our messaging is getting through that you've been done wrong by people telling you that insurance is an investment, that annuities aren't an investment. No, they're insurance products. And there's better ways to insure things in 99% of the cases than what you've been presented. That you realize strategies which we espouse in these videos can be done by everybody. We're here to empower you as individual investors. When you have your questions, you're calling us, and Danny's most likely the one to answer the phone. And then when you want strategies done for you, the ones that we talk about here, because you're too busy or it's just a little bit hard to keep up with sometimes, you're calling us, 855-732-5932. And look, it's only a DocuSign form or two away if you'd like to become a client of the firm. And we'd love to have you. We'd love to have you join us. So to do that, just call 855-732-5932. It's so inexpensive, especially to what some opportunity cost has been taken from you, stock nerds and market lovers. And then look, if you want to get a hold of me, I used to give my phone number out. Now I give this out. It's @TJ Reazor, my Twitter handle. You can message me anytime. And one of the questions I'm going to answer tonight came in just now via message, and then one came in via email. So let me do this real quick. I feel awful too. Like this message I wanted to do on Tuesday, and I didn't get a chance to get it out. I get asked about our ATR lines that we use in the shop here all the time, the average true range. What's the average true range of? So if this is the mean, and everything comes back to the mean, we're going to talk about this in a second. The mean is that I'm measuring one, let me see here, excuse me, my mouse gets a little wonky there, 2 and 3 ATRs above the mean, and 1, 2, and 3 average true ranges below the mean. It's measuring over a 21-day period. I set that. I want 21 days. It's a Fibonacci-based number. This product here, DDM, travels 1.14 cents a day. But if I do this, let's just put Tesla in here. And so Tesla, over 21 days, the average range of Tesla, if I come on down here, is 100. It keeps changing because it thinks I'm looking at these price bars. But look at the lower left-hand part of your screen. It's $108 over 21 days. And so here, now I can block it. $108. That's crazy, right? Well, that's Tesla. And so you want to be able to measure, is something extended or is something trading in a range, and it's your opportunity to potentially get in if it meets your rules, like your fundamental rules and your technical rules. What I wanted to do was show the chart set up for this. So if you're in Thinkorswim, just go to Studies, go to Edit Studies, and then just pause the video right here, and you can absolutely see what the chart setup is for that. On your other platforms, I'm not going to pretend that I know, because I don't. I'm going to start working with Interactive Brokers here. We started working with them this week or last week, and I'll start setting up the charts there for all of our IB fans. But if you're on a different platform, it can be a little arduous. But always ask. Sometimes I know, sometimes I don't know. And then the second question that came in was an after hours question. Person put in an after hours order, and it didn't fill till the market session opened, and it filled higher. So oftentimes you have to put in there GTC, maybe it's like EX for extended session. So good to cancel, extended session. There are no market hours before the session or after the cash session. You have to put in a good to cancel order, extended hours. Maybe it's EX or EXT, but you always have, and it's always going to be a limit order. It's never going to be a market order. So, and they don't fill right away because that oftentimes it's very thin. But if you're trading something like Apple, or maybe there's a ton of volume coming in because some news story broke, but you can have volume there, but you still have to put a limit order in, and it's a good to cancel limit order, and it's extended session. Whatever platform you're on, whether it's Fidelity, whether it's E-Trade, whether it's Schwabi, you have to actually make sure you have those things checked or selected. So hopefully that answers both of those questions. So let me do this for you, because the indices, I think the indices go higher here. Now I know there's a jobs report tomorrow. You can lose your ass on a Friday because we're the only market open after 10:30 Central, and so a lot can go wrong on a Friday. But this market looks like it wants higher, and I don't know if it's for people to say, we'll talk about complacency here in a minute, but you got to have some rules to get you into some things. And so, like a lot of people that write in, some of them have missed this. And when you're looking at this S&P chart, this isn't extended. It's at the 2 ATR range. This is where it pulled back before, but I think it's making a run at the third ATR. And I could be wrong. Tomorrow we could just fall apart. It's a market and anything can happen. I don't come on here to be right. I come on here to give you insight into what I'm seeing. And so then you can take action, limit your risk, and hopefully use the information to better yourself. And so here is the second ATR. Again, that's where we pulled back in July. But you've gotten there, and I don't think this is done yet. There's something, and it's not the normal stocks that are fueling this. And I know Apple's had a big move. Take a look at that. So AAP, I mean, Apple's had this just tremendous move. I was telling Don earlier on Monday, like I think Apple wants 450 when it was all the way down here. Where is Monday? Yeah, like it was at it was 423, 425. So it was at the end of the month. It's like I think Apple wants 450. Maybe it was Monday. Who the hell knows? It doesn't matter. It's there. It's beyond there. Does it go higher? I don't know. I wish I had Apple, and I wish I had a position in the Qs, but I have a very Nasdaq centric portfolio. It's full up right now. But what I did get with Don in July, and let me show you this, are Dow double positions and RTY double ETF positions. And so, well, Tim, why didn't you get the Qs? Well, I didn't know Apple was going to make that big breakout, and I had a very Nasdaq centric portfolio, and so I wanted different exposure. And when I'm looking, like I picked up a UWM position on 723. And so when I'm looking at my average true range charts, and I want exposure to what typically rallies when the Nasdaq centric, the high flyers, the ones that everyone's been talking about all year, when those stocks don't rally, I want exposure to what does move, and that's typically the small caps in the Dow. And so when I'm looking at this, I'm looking at 723. So here is something that's just traveling in a tight range at the 1 ATR, and it spikes and then it comes back. And Don and I think we got it right in this area. But look, it just keeps consolidating, pulls back to the mean, and then does this. And what I'm pointing out is we could have done a better job by just being patient and waiting for the mean. Because right now, what's going to happen is, and I don't know when. I'm not a prophet. Even though I look at the right side of the charts and talk about what could be, it doesn't mean it has to be. And so when you look at Apple, there's so many people that have the FOMO, right? but you're going to get an opportunity. Now, is Apple going to pull back? Don't misunderstand my words here. Is Apple pulling back to right here is the mean to 400? No, I don't think that. I want to be really clear about that. But this will consolidate. These lines will come up, and you'll get your opportunity. But it might take an immense amount of time to do that, or maybe it never gets back to the mean, and it just consolidates here. Well, then what you want to do is you want to come over here to say, if I could do this, to your daily chart. You want to come back to your daily chart and go, okay, can we get, if we're not going to get a pullback to the 21, and we might, who the hell knows, but maybe it's rule-based, right? Like maybe you buy a half a position on a pullback to the 8. Could you get a pullback to the 8? Maybe the 8 comes to meet price up here. So you don't want to use one tool in a vacuum. You want to use a number of tools to form a pretty global opinion about your rules. And so, yeah, like I don't have Apple. I wish I had Apple, but I had a portfolio that had good beta to it. And so then let me get something like RTY. Let me get something that's trading in a super tight range. It clears the 200, right? It's clearing 200 on 7. Here's 723. So it looks like it wants to take off, pulls back to the 8. That's a buy. And then look, it just consolidates, pulls back to the 21. And now, before you know it, Bob's your uncle. And we talked about this, stock nerds. We talked about this on Tuesday. If you got up to 1551 on the RTY, you would feel that bullishly in stocks, and you have felt that bullishly in stocks this week. And so now it's where do we go from here? And I still say that I think what can drive this market higher doesn't have to be all the traditional stocks that have been talked about all year. A couple of things that this rally's been broad, and so which is good, which is a good thing for the market. And so can the RTY, now the second ATR, get up to the third ATR? Yes. And when will I want to take some gas off the pedal? If those indices were to travel up to those third ATRs, the small caps, the Dow, then I'm going to want to take some, especially this NASDAQ. Because look, the NASDAQ doesn't get up to the third ATR very often. There's time in June it did, and it pulled back. That's a pretty good sharp pullback. Got up there in July, and you know, if you a little chunk of change here, then it pulls back to the mean. So if you've missed this, and when it pulls back, you've missed it, you're like, okay, I'm going to buy something at the mean. But then there's a news story that tells you that China relations are bad or coronavirus is getting worse, and you don't execute your plan. And how you have the courage of your convictions to execute your plan is to take small position size. So if you normally take a 5% position, take a 2.5% position. I mean, don't want to go to zero. It can't ruin you. Have some sell rules. Maybe you sell, like if it doesn't work out, you know, maybe you're going to be the person that sells at 7-8% loss. Maybe if it closes below the second, you know, this first ATR here, like, you know what, regardless of percentage, if it's below, even if it's below 8%, I'm out. And that's how you need to operate. But there's a study Don talked about in the video podcast last Friday that's so important to what's happening in the markets right now, that there's so much money sitting on the sidelines because we're near all-time highs on the S&Ps, only a stone's throw away, and yet more people in the AAII survey are bearish than they've ever been, and that study's a very good contraindicator over the years, and it's fascinating to me. Doesn't mean we can't pull back tomorrow. Doesn't mean we can't sell off tomorrow, but a lot of that is known, right? What they're going to release tomorrow. So it's interesting what's taking shape here. And so what do I like here? I like zoom. I like Zoom here. I like what it's doing here. Consolidating, it looking like it wants to try and break out to that blue sky territory of 281 as it gets ready to make an potential earnings run into September. I like Dexcom here, man. Like the chart of Dexcom. Comes down, tests 21 today, holds, and then, you know, finishes above the 8. That's good work. Good work, Dexy. Let's see here. By the way, Apple, this is what we were talking about the other day. Apple, no, that's already a codex we'll talk about here in a moment. Apple got a downgrade, what, yesterday from Bank of America? They downgraded the stock and yet they raised the price target. That's called your boys didn't get it when they needed to. So they take it down in the morning so they can ride it up in the afternoon. That's why upgrades and downgrades are just, it's a circus. Audio codecs, AUDC, bought this the other day. And so it comes down to, I'm okay here at the 34. We'll see though, I need this little zone here to hold for me. And so what does that look like on an average true range chart? Yeah, just right there's the mean. And it's just challenging the zone of support. We'll see if it can get some bought at the mean a couple days ago. Now we'll see if it can hold that zone. Let's see here, boy, Amazon looks like it's setting up for another move higher. And that another move higher could just take it back up to the third ATR. That'd be a pretty impressive move, right? And then the last thing we're going to talk about here, Tesla. What about like Tesla? Like some Tesla here. And then Roku. So Roku reported earnings last night. And so I didn't quite have enough to meet my rules to hold the whole position. So what I did was I sold half. So I sold half of my position for plus 6.98, 6.88, something like that, just about 7%. Okay, and so somewhere in there. And then, so now I've got a gain. And so then I still have half. And I believe this is a small, like 1 minus 1 minus, maybe it's minus 2% loss right now as it's pulled back to the mean. And so, yeah. And so we'll see what that does. If it wants to hold the mean, I might hold that last half position. We'll see what it wants to do for me. But that's how I handled Roku. And then I don't own this FSLY, but I know a lot of stock nerds and market lovers do. This pretty much went down the expected move. Boy, and even though it's at the mean here, when they do things like this, they sometimes want to stay down here for a little bit and just kind of regroup. Like they got punched, they got a standing 8 count, right? And so we'll see it. But Fastly's been a volatile stock, so nothing would surprise me with what this stock did. But there a lot of people got burned. Speaking of burned, boy, oh boy, this is why I'm also glad we own the Dow. The easiest way to play the recovery trade is owning the indices. I mean, how many people? I mean, Mickey's tears, right? They're just weeping Mickey's tears if you shorted this thing. I've been no fan of Disney for the longest time, but I'm glad I own the Dow. I totally have, and this move, glad to see it. And so happy about that. And I don't own AAL, and I don't own a bunch of the small cap stocks that benefit when these types of stocks rally, but R2, I'm glad I own it. And so, yeah, it's easier for me to own. I don't want to own Spirit. I don't want to own American. Hell no. But I don't mind owning, I don't own any oil stocks. I don't own any of the small cap banks. But when they rally, like what are the regional banks doing? How many people have told you getting the regional banks or getting the money center banks, just losing your money year after year? There's no reason to be. But you can play the indices, and you can do that through what? Oops, IWM. Yeah, it's easier to do that with IWM and DIA than trying to pick those individual winners or what's going to rally. And so, yes, super glad we own those indices. Listen, we're going to talk a ton of metals tomorrow on the video podcast. Whole bunch of earnings plays and stocks that we've rotated through that we don't typically get through. We'll do all that tomorrow. And we'll go over some things on the watch list, preview the 21 over 21. I'll tell you that video podcast and matched with Don's 21 over 21 list. Just absolute powerhouse tools, all free for you. We don't make you do anything for them other than just click on the website. You don't even have to register or subscribe. You can send them to anybody you love and care about. We're here to help you get better or to further your success because you're already great. And so anything we can do in that regard, we love to be there for you. So with that, we have a great night, and I will see you on the next update.